Welcome to the STR Home Financing Podcast, where we believe a legacy is something you build, not just something you leave behind. And now, here's your host, Jeff Chisum.
Hey, this is Jeff Chisum with STR Home Financing Podcast. Welcome to episode 65. Hope you are doing well. If you could do me a favor, I have an ask before I get into this episode. If you could hit the like button, whether you're on Spotify or Apple, and write a review. I haven't had any reviews in a while. It helps the show. It helps as I move forward with helping more people in this space to get the word out about the financing options and strategies for buying short-term rentals. So appreciate that. Means the world to me. I wanted to come with a informational piece episode for you today. So we've gone into the ABCs of the 10% down loan, DSCR loans. Haven't heard that episode. It's one of the maybe in the first 20 episodes, Create Your Own Down Payment Bank, where we talk about the finer points, the nuances of leveraging a HELOC and not over leveraging to fund your down payment and closing costs. So that idea that you're using 100% financing effectively to buy a property. So literally 100% of other people's money to invest in this asset class. But today wanted to just go through a comprehensive list of the acceptable sources of funds for down payment and closing costs. So I'm just going to kind of go through those, and always happy to jump on a phone call. Anything that you want clarification on, anything that you have questions on, you can go to my website, strhomefinancing.com. You'll get to a link to schedule a phone call, and always happy to jump on a phone call with you guys. The first one that I wrote down that not a lot of people may realize is an acceptable source of down payment is crypto. You can execute that transaction directly from your account to the closing table or whatever works for you that you're comfortable with. But through the underwriting process, if we're showing that crypto is your source of down payment and closing cost, then that is acceptable. We're going to get a pass on that. We're going to get a green light. We're going to get an approval. Brokerage accounts, of course, money that you may have in the stock market that you'd like to pull out and use towards down payment and closing cost. A business account, so moving money over from a business account or money that you have in a business account, of course, as long as you show to be the owner of said business. So it can't be somebody else's business that you're pulling money out of unless it's your partner. That partner's on the loan. HELOCs. So whether it's on a HELOC on a primary residence, on a second home, an investment property, those are acceptable sources of funds for down payment and closing costs. So the thing that I would say with that is really no other loan is an acceptable source. So you can't get a short-term loan. You can't go to the bank and get an unsecured loan for the down payment and closing costs. So that's important to know. But you can use a HELOC on any properties that you own. So with that, I'll say we have a really good source and we're able to originate those now. Whether it's a primary residence or a second home, we can go through that process to put that in place, along with getting a pre-approval in place at the same time. That's the nice thing about having your pieces of the puzzle in front of us. Our applications are not product specific. We really can guide you, direct you, help you with anything in the United States. The other thing that I would throw in is we can help you with any type of residential lending, whether it be a primary residence, investment property, second home. Of course, we have the 10% down second home occupancy loan. That's our most popular product that we originate, DSCR. But really, whatever the occupancy is, usage is, we can finance anything up to 4 units, non-warrantable condos, just not tree houses and container homes yet. But we'll see as time goes on. A 401k loan. So that's where a lot of people will see, man, I sure do have 6 digits sitting there in an account that is up and down. It's a roller coaster for me. It's been good lately, but the word is that it could be headed south. So something that repeats itself over time, having your money in the stock market in a retirement account. What I recommend is if you have a bunch of 401ks sitting out there with past employers, go back and listen to the episode that I did on how we bought our second property. Can't tell you the exact episode, but it's how we bought our second property. I think it's within the first 10 episodes, and just talking about using a self-directed IRA. So we're not cashing out a 401k. We're not taking that tax hit on that retirement money. Now, the other way that you can leverage a 401k is if it's with your current employer. In that case, you would be borrowing that money. You would be paying yourself back. So there's no tax hit. The things that I would mention there are you just want to touch base with your provider, make sure you know what those repayment terms are. A lot of times they can just deduct those from your paycheck on a biweekly, monthly basis. So paying yourself back, that's great. You're going to put that money back in there. There's no tax implications, no tax penalties doing that way. The other thing that you want to be aware of is just the timing of that process to get that money out. I always tell people the best time to get pre-approved, if you're thinking about buying a property, was yesterday. Today's the next best day. Along with filling out the application, going through that process, should be to check out with the administrator of your fund what the timing of that process is and what the process looks like. So you just want to make sure that you're not scrambling at the end. It delays closing, something detrimental like that, something that could be very stressful. So check that out. So cash, you may be someone who just, for whatever reason, whatever means, you acquire that. You keep cash around, you have cash around, you have cash in a safe. You can't just pull that out, put it in the safe unless you have trailing documents of where it came from. So you may have a bill of sale that matches the cash amount that you put in the bank, but the best rule of thumb is to have that money seasoned in a bank account for at least 2 months. The powers to be determine that once that money is in your bank account for at least 2 months, then it is yours. You own it. So the other one would be a sale of an item. Maybe you have something of significance. You sold a motorcycle, you sold a vehicle, and it was whatever, $10, $12, $20, $30,000. You want to make sure that you have the bill of sale that documents that as you being the owner and the seller with the amount. And then you want to make that amount on the bill of matches the deposit into your account. And of course, would all be you plan on within a 2-month period where it's been seasoned in your bank account yet. But it's important that amount on the bill of sale matches the amount that goes to the bank. So you don't want to say, okay, I'm going to deposit this, I'm going to take cash, deposit that entire amount into the bank account, the bank statement, that policy. The last one would be gift. You parent that they just want to gift you funds to be able to go and do this. So the rule of thumb there is if you're going to put 80% down, there's no minimum the funds needing to come from your own funds. So they could gift you the entire down payment and closing costs. That's no problem. If you're doing the 10% down loan, then those funds needed for closing costs and down payment, half of those could come from a gift, and then 5% of the down payment would need to be coming from your own bank account, your own funds. So could be 5% down payment comes from you, your funds, 5% and closing costs come from a relative or family member. So hope this information helps. Let's take action. Until next time.
Jeff Chisum is a registered mortgage loan officer, NMLS 673623 with CMG Home Loans, NMLS ID 1820. CMG Home Loans is an equal housing lender. All programs, products, and terms discussed on this show are subject to change without notice.